The news day continues here on One News Now. I'm Dani Laurel. Now, the U.S. Federal Reserve has softened its stance in the fight against inflation with the delivery of a smaller rate hike. The Fed increased the benchmark lending rate by 25 basis points to a target range of 4.5% to 4.75%. But Fed Chairman Jerome Powell signaled that the battle is not yet over, saying more rate hikes may be necessary.
So we've raised rates 4.5 percentage points, and we're talking about a couple of more rate hikes to get to that level we think is appropriately restrictive. And why do we think that's probably necessary? We think because inflation is still running very hot. We're, of course, taking into account long and variable lags, and we're thinking about that. The story we're telling about inflation is, to ourselves, and the way we understand it, is basically the three things that I've just gone through a couple times. And again, we don't see it affecting the services sector ex housing yet. But I mean, I think our assessment is that we're not very far from that level. We don't know that, though. We don't know that. So I think we're living in a world of significant uncertainty. I would look across the spectrum of rates and see that real rates are now positive, right, by an appropriate set of measures, are positive across the yield curve. I think policy is restrictive. We're trying to make a fine judgment about how much is restrictive enough. That's all. And we're going to, that's why we're slowing down to 25 basis points. We're going to be carefully watching the economy and watching inflation and watching the progress of the disinflationary process.
Did you or your colleagues discuss the conditions for a pause at this meeting this week?
Well, you'll see the minutes will come out in 3 weeks, and we'll give you a lot of detail. We spent a lot of time talking about the path ahead and the state of the economy, and I wouldn't want to start to describe all the details there, but that was the sense of the discussion, was really talking quite a bit about the path forward.
Meanwhile, on the domestic front, factory activity rose to a 7-month high in January. That's off of the back of stronger foreign demand. The S&P Global Philippines Manufacturing Purchasing Managers Index, or PMI, rose for a third straight month to 53.5 last month. That's from 53.1 in December of 2022. This January reading was the country's highest PMI reading since 53.8 in June of 2022. A PMI reading above 50 indicates improvements in operating conditions compared with the month prior. S&P says operating conditions across the country's manufacturing sector, quote, improved solidly in January, in which sharp upturns were noted in both output and new orders. The financial information firm also noted a sharp rise in production levels, which expanded for a fifth straight month. S&P says this was mainly due to increased demand for Filipino manufactured goods. All right, checking in on the markets and how it's opening this morning. Quick peek on the index, which is down to 7,007. That is around 0.4% here. Let's take a quick peek at the movers of this morning. I'm just going to pull out the one-day chart for you. We are just about 15 minutes into trade. You can see URC leading the chart here, up by 2.2%, followed by Mega World, which, as you know, was heavily sold off after having been taken out of the index there, or it will be taken out of the index. It's up by 1.8%. And in fact, AC Energy is down by 2.5%, despite the fact, of course, that they just did mention, and I'm just going to pull out the AC chart for you guys, if you can see that here, that they have consolidated the energy farm over in Australia, but that did happen after AC did jump by 7.1% already yesterday, together with a lot of other energy stocks on the back of that PMI reading. Now let's take a quick peek at those energy stocks and how those are performing this morning, if I can get it. All right, there you've got it. SMC, or San Miguel, down by 1%. Of course, the court did rule that there will be a suspension in terms of them having to provide power over to Meralco. You've also got the other stocks, in a mixed bag here. So for FGen, which is of course also a renewables energy plant, up by 1.2%. SPNEC as well, still continuing that fight. So energy stocks fairly in the green today as we kick off the Thursday trading day. Now let's pause for a quick break and stay with us. We'll be back very soon. You're still watching One News Now. I'm Danny Laurel. Now, with production ramping up and offshore issues calming down, which stock should we be picking up? Here to talk about that and more, we have with us Jerry Alfonso, equity analyst over at Regina Cap. Hi, Jerry, and welcome to the broadcast.
Hi, good morning. Thank you for having me.
Jerry, let's kick off with the issue with the inflation over in the U.S. Powell has mentioned disinflation has started, but he did warn of continued risks there, but he did deliver that 25 bips hike as expected. How does this affect us? Are there any particular stocks that we should be looking out for here as the BSP has its turn to act?
Well, okay, so the Fed are now very less hawkish when it comes to raising the interest rates. So this is a good thing for the PH market because I think also the run up last session was due to this.
Okay.
Like this 25 BPS or the less hawkish stance of the Fed could drive investor confidence, because this means that companies may now borrow money in a less, they wouldn't expect a higher interest rate, which means that they could, it is a good, when it comes to their borrowing, it's a good thing for them.
Okay, what are the markets pricing in terms of our domestic economy and how the BSP will be acting? Are they pricing in the same 25 basis points that we will be keeping in step with the Fed, despite, of course, them saying that the inflation might be above 7.5% still in January?
I think the BSP said that they will be following the Fed rate hike. So we are now expecting a 25 basis points in the coming interest rate decision. So yeah.
Okay, there still seems to be, however, a pullback today. Give us an idea why you mentioned that the index did jump yesterday, 3.6%, no, on the back of possibly the Fed moving. But why the pullback today, and why are we not getting above the hurdle of above 7,000 or continuing this bull run? Is there still this very strong resistance at 7,000?
Yeah, really, the performance yesterday really surprised investors, as we have seen the two sell downs early this week, and then we've seen a massive spike yesterday. So I think they are pricing in the US rate decision, and also probably we already priced in that the inflation would be elevated in January. And one market mover that we're seeing today is also the earnings season. Analysts are probably very optimistic towards the earnings of the companies. And we could see above average volume tomorrow for the rebalancing. So probably the investors are also positioning for the rebal play.
Okay, let's talk about that rebal play, because like you mentioned, no, we're still seeing some movements here. Of course, Mega World and RLC are still in the pipeline until, as you mentioned, tomorrow. Has that sell-off already stopped?
We can't know for sure, because since Mega World and RLC would be deleted in the MSCI rebal, so there is still a possibility that it could launch tomorrow.
Okay, so the pain isn't over even as they recover this morning. Give us an idea of whether net foreign buying will be continuing, or if this trend, we've seen that at least in the past couple of days. In January, we had such a good run, and then quite a sell-off just towards the end. What's the story here? Especially with the Fed moving, will the foreign investors be coming back in, and to what extent?
Well, I would say the economy is looking to pick up in 2023. As you've mentioned, the PMI, it has good figures, and then the economy is starting to reopen right now. So here in the C region, we are one of the bets of of the foreign funds, since we are next to Vietnam when it comes to GDP growth.
Okay, so expectation that the foreign fund buying in will be continuing. And for you mentioned the earnings, no? What are you expecting, especially as we're waiting for fourth quarter earnings to come trickling in? And how would that color your expectation on the PE valuations for this year?
I think with the earnings season, actually, RHI already released their figures just this morning, and they are on a record high net income. So I think we could expect, especially the consumer sector, to book good revenues.
Okay.
Since in the historically, consumer sector is very resilient compared to other sectors. So yeah, that's one thing that we could expect. Consumer sector is one of the good sectors that we could look forward to.
All right, so waiting for, of course, those numbers to be coming in. As you mentioned, RHI giving better than expected from your point of view. Thank you so much, Jerry Alfonso of Regina Capital.
Thank you.
For more updates, visit News 5, the Philippine Star, and Business World online, or visit our website, onenews.ph. For more in-depth analysis, you can also catch One News on the SignalPay app. Register for a free account now. That's at www.signalpay.com, and stream One News Live anytime, anywhere. I'm Danny Laurel. Join us again at 11:15 a.m. We are One News, all sides, all the time.